Are you tired of manually drawing supply and demand zones, only to second guess if they are strong enough? What if you could have an intelligent system that not only pinpoints high probability zones for you, but also filters them based on quality, and even alerts you to the best opportunities automatically? Hello traders, and welcome to the definitive guide for the Demand and Supply Zones Pro Indicator. I am recording this tutorial on behalf of its creator, Afnan Tajuddin, sir, to give you a complete masterclass on this powerful tool. He has designed it to be one of the most comprehensive supply and demand indicators available on TradingView. This is a paid indicator, and you can purchase a subscription for this indicator from marketuptodate.com. If you are a supply and demand trader and you are looking to graduate from manual zone drawing, and you want a professional tool that not only identifies high probability zones but also evaluates them for quality, integrates multi-timeframe analysis, and provides a full suite of analytical tools, then you are in exactly the right place. This is going to be a very detailed, in-depth tutorial. We will not be rushing. We will cover every single setting and feature so that by the end of this video, you will be a master of this indicator. Here is our roadmap for this session. First, we will dive into the engine room, where we will break down the settings that control how zones are identified and filtered, including zone quality, higher time frame zones, and the underlying rules. Next, we will explore the advanced charting and visuals, looking at powerful aids like multi-time frame candles, swing pivots, and built-in technical indicators. And finally, we will move to the automation masterclass, the final and most crucial part, where we explore every single alert setting and the Pine Screener to build a fully automated opportunity finding system. Grab a coffee and let us begin. The very first thing you see on the chart are the colored boxes. These are our demand and supply zones. The green boxes are demand zones. This is an area where buying pressure previously overwhelmed selling pressure, causing the price to move up explosively. The theory is that when the price returns to this area, a pool of unfilled buy orders left by big institutions may trigger, causing another bounce. The red boxes are supply zones. This is the opposite, an area where immense selling pressure took control of the market. We anticipate that a return to this area may trigger a sell-off as institutions defend their positions. The true power of this indicator lies in its ability to automatically identify, filter, and present these critical zones to you. Let us now open the settings to see how we can control this entire process. The engine room, zone identification and rules. We will start from the very top and work our way down, beginning with the settings that form the core of the indicator's logic. Current time frame zone settings. This group of settings controls the primary zones you see on your current chart. First, we have limit demand zone and limit supply zone. By default, these are turned on. This is a crucial feature to prevent chart clutter. It tells the indicator to only show a specific number of the most recent zones. Right now, it is set to 3 for both. If I uncheck this, the chart instantly becomes a chaotic mess with every zone ever formed. I highly recommend keeping this feature on. You can adjust the number from 2 up to 19, but a range of 3 to 5 is usually ideal for a clean and focused chart. Next is minimum zone quality. This is arguably the most important filter in the entire indicator. Our intelligent algorithm evaluates each potential zone based on over a dozen factors, like the strength and sheer explosiveness of the price move away from the zone, the structural integrity of the base, whether it broke a key market pivot, its profit potential before hitting an opposing zone, and so much more. This setting allows you to filter zones based on this deep analysis. The default is fair quality. If we set it to low quality, we will see more zones appear, including weaker ones that you might want to ignore. If we move it up to good quality or even best quality, the indicator becomes extremely selective, only showing you the highest probability setups. See that? By demanding higher quality, we have filtered out a weaker zone, leaving us with a cleaner, more reliable picture. For new users, fair or good quality is the best place to start. For setting up alerts or using the Pine screener, I strongly suggest using good quality so you only get notifications for stocks that are approaching strong and reliable zones. Higher time frame zone settings. Confluence is key in trading. A demand zone is much more powerful if it exists inside a demand zone from a higher time frame. This section lets you see that powerful confluence directly on your chart. Let us turn on display higher time frame zones. Next, the time frame selector. Here, you pick your higher time frame. If I am on a 1-hour chart, I might want to see zones from the daily or the weekly chart. Let us select W for weekly. Now for higher time frame limits and quality. Just like before, we have separate controls for these higher time frame zones. I recommend setting the higher time frame limit to just 2 or 3, as you typically only care about the most recent, most relevant higher time frame zones. For the higher time frame quality, I suggest starting with low quality. Now, why would we do that? Because even a low quality weekly zone is a major point of interest and a huge obstacle on a lower time frame. When you find a lower time frame zone inside that higher time frame zone, you have found a very powerful setup. Now you can see these larger purple and light blue zones. These are our weekly zones. Zone rules. This section defines the behavior and the life cycle of a zone. First, rightward zone extension or extend zones. You can set how many bars a zone extends to the right, or you can check extend zones to make them extend indefinitely until they are broken. Next is penetration type to delete violated zone. This is crucial. It defines when a zone is considered dead and is removed from the chart. The default is high-low. With this setting, a zone is considered broken and is removed the moment a candle's wick pierces through the other side. This is an aggressive approach. The other option is close. With this, the zone is only removed if a candle actually closes beyond it. This is a more conservative and often preferred method, as it ignores volatile wicks that might just be market noise or aggressive stop hunts, which do not signify a true change in control. Then we have remove tested zone as per penetration percentage. A fresh, untested zone is always the strongest. Once the price enters a zone, it starts to get used up as orders are filled. This setting automatically removes a zone once the price has retraced a certain percentage into it. The default is 70%. This keeps your chart clean and focused on zones that still have high potential and are not depleted. Finally, authentic structural zones only. When this is checked, it tries to filter authentic structural zones. It focuses only on zones that form at good structure occurred. Candle rules here. You can fine-tune the very definition of what constitutes a valid zone. For most users, the defaults are perfect, but let us review them so you understand the mechanics. Leg in and leg out body size. These sliders control the required explosiveness of the candles leaving and sometimes entering a zone. A higher percentage demands a stronger, more convincing move, indicating a true imbalance. Base body size. This defines the small, indecisive, consolidative candles that form the base of the zone. Narrow range candles as base. When this is checked, the indicator uses a more dynamic, adaptive calculation to identify base candles, which automatically adjusts to recent market volatility. I recommend keeping this on for more accurate zone detection. Wick-to-wick zone marking. By default, zones are drawn from the wick to bodies of the base candles. You can change this to mark from wick to wick for any or all zones, which will result in larger, more conservative zones. Number of base candles. You can choose to allow zones with 1, 2, 3, 4, 5, or 6 base candles. Disabling the higher numbers will result in only very tight, compact zones being shown on your chart. Candle colors. This section lets you override your chart's candle colors to highlight the invisible candles, rally, drop, and base candles identified by the indicator's logic. This can be a great tool for studying price action and understanding how the indicator interprets the market. Now let us look at the features that add extra layers of analysis and visual confirmation to your chart, turning it from a simple chart into an analytical dashboard. Multi-time frame candles. This is a fantastic utility. It allows you to see the actual candles from a higher time frame displayed in the corner of your chart without ever having to switch time frames. You can enable up to 2 multi-time frame displays using Enable Timeframe 1 and Enable Timeframe 2. Let us use the time frame selector. We will enable Timeframe 1 and set it to the weekly time frame, and just like that, you can now see the last 10 weekly candles right here on our chart. This is perfect for monitoring higher time frame price action and critical candle closes without ever leaving your execution time frame. You can adjust the number of candles shown and their spacing to fit your screen. Label font settings and zone colors. These two groups give you full control over the aesthetics of the indicator. In label font settings, you can choose what information is displayed on the zone labels. By default, zone quality is on, showing you if a zone is low, fair, good, or best. You can also display the proximal and distal prices, which are the proximal and distal levels of the zone. Now, if you enable zone name, you will see labels like Rally 1 Base Rally or Drop 2 Base Drop. This is like the indicator is speaking to you in the language of price action, telling you the specific pattern that formed the zone, and the number tells you how many base candles were found. This is great for studying market structure. You can also control font sizes and colors for both current and higher time frame zones separately. In zone types and colors, you have a master color palette. You can customize the color for every single zone type and state: rally base rally, drop base rally, tested zones, and even violated zones. You can also enable or disable specific zone patterns if you only want to trade certain types. There are separate settings for higher timeframe zone colors to easily distinguish them from your current timeframe zones. Okay, we have covered how zones are found and displayed. Now let us get into the features that turn this indicator into a professional analytical workstation. Higher timeframe curve analysis. This is one of my favorite features, based on institutional trading concepts. It treats the market like any other business. You want to buy your inventory at wholesale or discount prices and sell it at retail or premium prices. When enabled, it takes the highest higher timeframe supply zone and the lowest higher timeframe demand zone on your chart and divides the range between them into distinct price areas. The red area at the top is the retail or expensive zone. Prices here are considered expensive. This is where you should be looking to sell. The blue area at the bottom is the wholesale or affordable zone. Prices here are considered cheap. This is where you should be looking to buy. The area in between is the fair price or equilibrium zone. There is also a 2-parts option. If you prefer a simpler model, checking this box will divide the range into just 2 halves, premium and discount. Now let us combine this with trend analysis, which you can see in the trend table. If the trend is up, you would ideally look for buy setups at demand zones that are located within the wholesale blue or fair green areas. Buying in the retail red area during an uptrend is counterintuitive and a low probability trade. If the market is sideways with no clear trend, you should be very cautious about trading in the fair green area. It is best to stick to the extremes, buying deep in the wholesale area. This single feature gives you powerful higher timeframe market context right on your lower timeframe chart. Trend analysis section. This dashboard provides several tools for chart analysis and customization. You can enable or disable a trend table on your chart. You can select an intermediate time frame or a higher time frame for the trend analysis. The intermediate time frame is configured within the alert section. You can also display sector and industry information directly on your chart. This feature is off by default but can be toggled on. The entire dashboard can be moved, resized, and repositioned to suit your needs. Zone and trade components table. Enable this table to view detailed information on demand and supply zones, including the exact price data for the proximal and distal lines, which are your potential entry and stop levels. Swing high and swing low. This is a built-in classic support and resistance tool based on pivot points. Checking swing high and swing low enables the feature. The period setting determines the strength of the support and resistance. A higher number looks for more significant, major swing points. The default of 3 is a good balance. For time frame, you can have the support and resistance calculated from your current chart or from a higher time frame for more significant levels. The maximum lines feature is another great decluttering tool, ensuring your chart is not flooded with dozens of old, irrelevant pivot lines. Moving averages and Bollinger Bands for traders who love to find confluence with classic indicators. These are built right in. For moving averages, you can enable up to 4 fully customizable moving averages, a rapid, fast, medium, and slow one. For each, you can set the length, the moving average type such as an exponential moving average or simple moving average, and even the time frame it is calculated on. For Bollinger Bands, you can display standard Bollinger Bands and filter demand zone and filter supply zone. I usually don't recommend this option added because of user request. Automation masterclass, alerts and screener. We have reached the final and perhaps most powerful part of this tutorial, so let's jump upside in settings menu, making the indicator work for you 24/7. First, it is important to understand how TradingView alerts work with their subscription plans. On a free plan, you have very limited alerts. On a plus plan, you can set up to 100 alerts, which is great for setting alerts manually on your top 100 stocks, one by one. On a premium plan, you unlock the ability to set an alert on an entire watchlist at once, and you get access to the powerful Pine screener. Therefore, if you want to fully utilize the automation capabilities of this indicator, a paid TradingView subscription is highly recommended. If you do not have one, do not worry. You can still use the indicator perfectly, but you will need to find opportunities manually by looking at the charts. This entire section is dedicated to creating highly specific, conditional alerts. Let us break it down. Under advanced conditional filters, you can align alert with higher time frame. When checked, you can choose between 2 powerful conditions. First, zone nested inside higher time frame zones. An alert will only fire if the current time frame zone has formed inside a higher time frame zone. This is a top-tier confirmation filter. Second, align with higher time frame curve location. This connects directly to our curve analysis. An alert for a demand zone will only fire if it is located in the wholesale or cheap area of the higher time frame curve. This is a massive odds enhancer. Stop duplicate alerts is a must-have feature. When this is on, you will only get 1 alert per zone. I highly recommend you turn this on for manual alerts to prevent your phone from blowing up with endless notifications if the price hovers inside a zone. It should be disabled, however, if you plan to use the Pine screener. We have minimum risk to reward filter. This powerful filter acts as a built-in trade manager. It checks if there is enough room for the trade to run before hitting an opposing zone. For example, if you set this to 2.0, an alert for a demand zone will only fire if the distance to the potential target is at least twice the distance to your stop loss, or if there is no opposing zone in sight for a great distance. This automatically filters out low-reward setups. Alert while approaching zone lets you get an alert before the price touches the zone. You can set it to trigger when the price is extremely close to or slightly away from the zone, giving you time to prepare. Under core alert toggles, we have on-demand zone and on-supply zone. These are the master switches to get an alert when price enters a specific zone. We also have new demand and supply zone creation. These toggles let you create alerts that fire the moment a new valid zone is printed on the chart. For optional toggles, many traders find follow intermediate time frame trend and extended condition useful. Follow intermediate time frame trend ensures you only get alerts that align with the established trend. Extended condition is a mean reversion filter to help you avoid chasing trades that are already overextended. Frankly, I do not use them as often, but they are here for those whose strategy requires them. Finally, there is liquidity, minimum average traded value. If you are setting alerts on a big watch list, especially for the Indian market, this is a lifesaver. Setting this to 10% CROR, for example, will ensure you only get alerts for liquid stocks that are easily tradable. It filters out all the low volume noise. Remember, this uses volume data, so do not turn it on for instruments that do not have volume, or you will not get any alerts. Setting up your first smart alert. Let us put it all together. First, you configure the indicator. You must first configure all your desired conditions in the indicator settings panel. For example, let us set our higher time frame. The default is weekly, but you can change it. Many intraday traders might set alerts on a 15-minute chart and use the daily as their higher time frame. Swing traders might use the weekly or monthly. It all depends on your personal trading style. We will set the current time frame demand zone quality to at least good and keep the supply zone quality at fair, and we will leave the higher time frame quality at the recommended low. Let us say we are looking for demand zones, so uncheck other toggles like on supply zone, new demand and supply zone creation. We will enable the alert for on-demand zone. Crucially, we will check stop duplicate alerts to get only one notification per zone. Now we open the alert panel. You can get here by clicking the alarm clock icon on the right. If you have premium trading plan, you can set alerts for watch list. So in symbols options select watch list. You can set alert for maximum 2 watch list in premium plan. Now we set the condition. Under the condition drop-down, we select the demand and supply zones pro indicator. Now this next drop-down is important. It will say any alert function call. You just need to select this option. The indicator is smart. It knows which alerts to trigger based on the checkboxes you enabled in the settings menu, like on-demand zone, new supply creation, and so on. Click Create. And that is it. Your smart alert is now active and will notify you when all of your specific conditions are met. Using the Pine Screener now, for those of you with a premium plan, let us take this a step further with the Pine Screener. I have it open already. First, select your market and watch list. You must first select the market and the watch list you want to scan. Make sure you have added the Demand and Supply Zones Pro indicator to your favorites list, otherwise it will not appear as a filter option here. Next, the time frame you want to scan. Let us use the daily time frame. Now, just like we did for the alert, configure the settings inside the screener's filter panel. Set your higher time frame, set the demand zone quality to good, and click Apply. In the filter list, you will now see options like on-demand zone and on-supply zone. Let us say I want to find all stocks in my watch list that are currently approaching a demand zone. I will select on-demand zone, ensure my watch list is selected, and click the scan button. Finally, you run the scan. Now you analyze the results. The screener will now populate with a curated list of stocks that meet our exact conditions. You can see columns here like demand zone proximal and demand zone distal, higher demand zone proximal, and even columns that tell you if the price is in the retail or wholesale area of the curve. This is your personal automated opportunity scanner. It is an incredibly efficient way to find high probability setups across hundreds of stocks in just a few seconds. Conclusion, and that concludes our deep dive into the Demand and Supply Zones Pro indicator. As you can see, it is so much more than a simple zone plotter. It is a complete analytical framework designed to bring institutional-grade supply and demand analysis directly to your fingertips. From the sophisticated intelligent zone evaluation and higher timeframe confluence to the insightful curve analysis and the incredibly powerful conditional alert and screener system, every single feature has been meticulously designed to give you a clear, objective, and professional edge in your trading. The power to filter markets and find A-plus setups is what a subscription to this indicator provides. Thank you so much for joining me for this comprehensive tutorial. I truly hope it helps you elevate your trading. We encourage you to spend time with the settings and customize the indicator to fit your personal trading style. If you have any questions, please drop them in the comments below. Happy trading, and we will see you in the next one.